could this latest round of stimulus lead to the next leg higher for the markets? Joining me now are Randall Ely, President and Chief Investment Officer at the EDGAR LOMAX company, Cole Smead, President and Portfolio Manager at Smead Capital Management, and Peter Bookvar, Chief Investment Officer at Bleakley Advisory Group and a CNBC contributor. Randall, do you think the stimulus checks are having a lasting market impact, perhaps, here?
I would say an impact. I would not say necessarily lasting, because needless to say, quite a number of developments are going to be occurring that are going to affect investor sentiment shortly, such as the rise in the 10-year yield. And sooner or later, that's going to have an effect.
So should you, Cole, then kind of fade this, given that we know that the 10 years been having an impact on the market, and maybe this stimulus impact, to the degree that there is one, won't last?
Yeah, the stimmies that are being handed out shouldn't be focused on in the slightest right now. What people should be preparing for is the problems we have in that they're small relative to the last 100 years. The pandemic, World War II was far greater, and the debt we're piling on is far greater than World War II. The monetization of debt is what governments always do. And the reality to what you're saying about the yield market, it's completely unprepared for that. So this is a total nightmare for most wealthy investors or institutions. And the only way out of this is quite a bit of fun in stock picking, which the market can't do for you.
Yeah, that's hard. Peter Bookvar, talk more about the debt side of this, and is that going to end up having an impact on the stock market as well?
Well, the large amount of debt that Cole mentioned, what it means is that all it takes is small changes in interest rates to have an outsized effect. You look at the late 1970s, we had double-digit interest rates, but we had very low budget deficits, very low levels of debt, so it didn't blow up the entire system. Now it's the exact opposite, where we have obviously low levels of interest rates, high levels of debt, but modest changes in interest rates really matter. I mean, look at the fourth quarter 2018. All it took was a 2.5 Fed funds rate from Jay Powell, and the market had a major hissy fit, enough that he completely reversed that policy. So that's why, while interest rates are low on an absolute basis, it's the rate of change that really matters here.
Okay, so given that big picture, Randall, you like Allstate, you like CVS. Why?
Because they are basic value players, and I'm not talking about just by traditional valuation metrics. These are companies that are well-funded internally. So whether or not money is easy or we go into a credit crunch, they should be strong, profitable players going forward. And you can buy them at relatively low prices.
So how do you protect yourself also, Cole? We were talking about some of the dynamics in this market, some of them perhaps alarming. What do you do? Because you don't get out of the market entirely, surely. We learned that lesson a year ago.
Yeah, it's a great question. We hold 5% cash or less on a regular basis. So I agree with you in that, John. The great part is, the S&P 500 looks terrible. It's set up for stock market failure the next 10 years, but that doesn't mean you can't make money. There's quite a bit of names, not market cap, but names that are incredibly attractively priced. Energy, it's names like Continental Resources. The financials look really well set up to benefit from this as well. And lastly, look at the mall REIT business. It's been left for dead, even though reopenings are happening. So that's kind of the cheapness of this. The second part is the economy will beat the stock market the next 10 years, which if you look at home builders, you're about to do a piece on home building. This is the greatest housing era in U.S. history. And people are completely underwhelming the opportunities in the economy, or let alone what goes on in cheap stocks. Investors under-own this, and that's why it's like having a fire hose shot into a teacup right now on names that are left for dead.
Shepard Smith here. Thanks for watching CNBC on YouTube.